Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This is Morning Forex Technical Report. Today's date is February 14th. Happy Valentine's Day to everybody out there. We had some Valentine's news with the CPI data coming out. The month-on-month numbers came in as expected at 0.5% for the headline, 0.4% for the core measure. As far as the year-on-year numbers, they were a touch higher than expectations, but a touch but lower than the previous month. Not by much, still remain elevated, which is a problem for the Fed. But what we can say is that the shelter accounted for more than half of the rise in the month. It rose by 0.7% for the month. And we didn't see the used car prices increase like as expected, which is good and bad, I guess. They fell in the month, but it's still a murky picture out there as far as prices go. We know that employment is high, and that's not likely to be a help for inflation. But we will see. I don't think the gains that we saw last year are going to continue on that pace, but you never know. So with that said, let's take a look at some of the technicals that are driving the currency markets, because there's some interesting moves. We'll start with the euro versus US dollar. Overall, what we saw was as soon as the number came out, we saw the dollar move higher, and then we started to see the impact of all the details within the report coming out, and we saw the dollar move sharply to the downside. Not sharply, quickly to the downside. And since then, we've seen a rebound back toward where we basically started, more or less. Take a look at the euro versus US dollar. The dollar moved to the upside, so the price moved down toward the blue line right here. That blue line represents the 100-hour moving average. As you can see, the price moved just below that level and then rebounded back to the upside. This took less than a minute or maybe a couple minutes. We saw the price move right up, back up to the 38.2% retracement of the move down from this high right here. This is a February high to the February low. So we found a resistance near the 108 level. That level also corresponded with these swing lows through here. And then we turned that floor to this ceiling right through here. And lo and behold, the price moved right up to that 108 level in this swing area and this 38.2% retracement. So what do we have? We have support down against the 100-hour moving average. By the way, this level also corresponds with or came within a swing area through here where we had a number of different swing lows and then swing highs. And, admittedly, we moved above and below this area right through here. But you can see the number of different times where the market had a swinging type rotation around this area right through here, 107.07 to 107.24 with the 100-hour moving average in between at 107.19. So with the current price trading at 107.51, just below the 200-hour moving average, it's a green line in this chart. The bias is a little bit more to the downside, but this 200-hour moving average is going to be our barometer. It's going to be our barometer to either upside, where we head toward the 38.2% retracement in those other swing areas, or the downside, where we head toward the 100-hour moving average in those swing areas through here. So, I'm not sure we made any progress with the CPI data, but we did see that the support and resistance levels both held. So the market ping-ponged back and forth, and we have the 100-hour or 200-hour moving average in between. Help define our bias. Anyway, let's take a look at the dollar versus yen next. And if we look at the that currency pair, it too is ping-ponging. This is the 4-hour chart for this currency pair. And if we look at the upside, which is the initial move that we saw in this pair, where did we go? We went right up to this swing area through here, where we have a number of different swing lows and swing highs. This is, again, the 4-hour chart. This goes back quite a bit a ways away. And I'm outlining all these levels where you can see the price moved above, it's more bullish, moved below, it's more bearish, moved above, more bullish, so on and so forth. And even in trading last week and this week, the market came up to that high area here and found resistance sellers. And into trading today, what we do, we found sellers against the top side of that swing area near the 132.90 level. Also in this area is a 50% retracement of the move down from this December high right through here to the December low or January low that we saw right through here. The 50% comes in at 132.68. So 132.68 to 132.90, and you can see the price moved up toward the top side of that area and then rotated back to the downside. And that downside found support near what? The 38.2% retracement of the same move to the downside. So, and this area is also home to swing lows and such swing highs through here. Same type of level for this pair, and we gapped to the upside last week near that level. Got a little messy through here, admittedly, but we did reestablish some support down here. So 131.29 up to 131.56, and the price came right in between those levels of 131.39. So ping-ponging back and forth. For giggles, let's take a look at the hourly chart, see if there's any sort of moving averages that we can rely on. And as you can see here on the hourly chart, we're above the 100-hour moving average. The price came down into that swing area. This is the same area that we saw off the 4-hour chart. You can see the 100-hour moving average is also near there, and this is the same swing area off the 4-hour chart as well. So we're above the 100-hour moving average. So the buyers are remaining in control. The only thing I can really say is 131.63, and this swing area remains our key support here for the dollar versus yen. As long as the price is above that level, we're more bullish, but admittedly we are being held in by the top side levels through here, where the price highs came up and stalled not once, not twice, but 3 times over the last week or so of trading. So that is going to be a key area to get to and through on the top side for the dollar versus yen. Let's take a look at the sterling versus US dollar next. And if we look at that currency pair again, we saw a move to the upside in the US dollar. So the sterling versus US dollar went down. And where do we find support? We found support right near the the highs from the Asian session, the highs from yesterday's trading to start off with. That's these levels right through here. Also found support near the 38.2% retracement of the move down from the high price that we saw over here to the low price that we saw right through here. And that 38.2 comes in at 121.14. This swing area comes in around 121.15 or thereabouts. And so what do we do? The price moved right down to that level, rotated back to the upside where we found resistance against what? Another swing area up through here where I had outlined these levels in previous posts. Need to get above that level, couldn't do it. The market rotated back to the downside. As you can see, we're trading more toward the downside here, and below the 50% midpoint. Let's earmark the 50% retracement as the barometer for more bullish and more bearish in trading here today. If the price can remain below that level, the bias remains more to the downside. We'll look toward the 38.2% retracement. If the price moves above that level, it'll be more bullish, with a look toward the 61.8% retracement in the swing end area on the top side for this currency pair. So there you have it. Look at some of the 3 of the major currency pairs. What could I say? The market is in a state of transition and data dependent, and looking at these levels very closely and finding a little bit good and a little bit bad. And that's causing a little bit good, a little bit bad, and the dollar moving either higher or lower, or lower and higher. So let's live with it and do our best. My name is Greg Michalowski. Good fortune with your trading. I'll continue to update you on the Forex markets from a technical perspective. Be aware, be prepared. Bye-bye now.